10 lessons from my worst trading year. There was a year I almost quit trading for good. Not because the market was impossible. Not because my strategy was broken. I quit, almost, because I let one bad year convince me I wasn't cut out for this. Looking back now, that year wasn't a failure. It was the most expensive education I ever paid for. And today I'm going to hand you that education for free. This isn't a highlight reel. This is the year I got it wrong, what it cost me, and the 10 lessons that came out the other side. Lessons that quietly rebuilt how I trade, how I think, and how I manage risk. If you've ever had a year where nothing seemed to work, where every rule you knew felt useless in the moment, this video is for you. Before the lessons, you need the context. Going into that year, I wasn't a beginner. I'd read the books. I understood risk reward. I could recite the rules of good trading in my sleep. And that was exactly the problem. I knew the rules, but I had never been tested by a real, sustained losing period. Knowledge and experience are not the same thing, and the market has a way of exposing that gap when you least expect it. The year started fine, a few solid months. Then a losing streak hit. Nothing dramatic at first, just a normal drawdown. But instead of respecting it, I fought it. And that decision, more than any single trade, is what turned a normal drawdown into my worst year. Here's what it taught me. Lesson 1. A drawdown becomes a disaster the moment you try to win it back. The losses themselves weren't what hurt me. What hurt me was the story I told myself about the losses, that I needed to make it back quickly, that the next trade had to be bigger, better, more certain. The moment you start sizing trades based on what you've lost instead of what your plan calls for, you've stopped trading and started chasing. And the market always knows the difference. Here's the takeaway. A drawdown is data. It only becomes a disaster when you respond to it emotionally instead of mechanically. Lesson 2. Overtrading is rarely about greed. It's about discomfort. I used to think overtrading came from wanting more money. That year taught me it usually comes from something else entirely, an inability to sit still with uncertainty. Every unplanned trade I took that year had the same root cause. I couldn't tolerate the discomfort of doing nothing. Taking a trade, any trade, felt better than waiting. Even a bad trade felt like progress, because at least it felt like action. Here's the takeaway. If you're overtrading, ask what feeling you're avoiding, not what profit you're chasing. Lesson 3. Your position size determines your psychology, not the other way around. I spent years trying to fix my emotions through mindset work, journaling, and breathing exercises. All useful. None of them addressed the actual problem. The actual problem was simple. I was risking too much per trade. When the size of a single loss could meaningfully dent my account, no amount of mindset training was going to keep me calm. Fear wasn't a personality flaw. It was a rational response to poorly calibrated risk. Here's the takeaway. You cannot think your way to calm if your position size is wrong. Fix the size first. The calm follows. Lesson 4. A trading plan you abandoned under pressure was never a real plan. I had a plan. On paper, it was solid. But a plan only proves itself when it's inconvenient to follow. And that year, I constantly abandoned it the moment it got uncomfortable. A real plan isn't the one that looks good in a notebook. It's the one you follow when you're down, tired, and certain that this time is different. If your plan doesn't survive a bad week, it wasn't a plan, it was a preference. Here's the takeaway. Test your plan against your worst moods, not your best ones. Lesson 5. Isolation makes every mistake feel bigger than it is. I traded that year almost entirely alone. No accountability, no outside perspective, nobody to tell me when I was spiraling. Every loss echoed in a silence that made it feel catastrophic, when in reality it was just a loss. Later, when I started sharing my trades and results with even one other serious trader, something changed. Mistakes stopped feeling like identity crises and started feeling like data points again. Here's the takeaway. Isolation distorts scale. Community restores it. Lesson 6. Revenge trading isn't about the last loss. It's about the story you attach to it. The worst trades of my year weren't reactions to losing money. They were reactions to what I believed the loss meant. That I was careless, that I was behind, that I needed to prove something to the market. The market doesn't know your story. It doesn't care about your ego, your bills, or your need to be right. The moment I started trading to prove a point instead of to follow a process, the outcome was already decided. Here's the takeaway. Revenge trading is a psychological reaction to a story, not a financial reaction to a loss. Lesson 7. Survival is a strategy, not a consolation prize. For most of that year, I measured success by how much I made. By the end of it, I measured success by whether my account was still alive to trade another day. That shift changed everything. Professional traders don't glamorize survival because it's inspiring. They prioritize it because it's mathematical. You cannot compound an edge if you don't have capital left to trade. Staying in the game long enough for your edge to play out is the strategy, not a fallback from one. Here's the takeaway. Protecting capital isn't playing it safe. It's playing it smart. Lesson 8. Demo confidence and live discipline are two different skills. I traded well on demo that year, almost suspiciously well. The moment real money was involved, the same setups felt completely different. Heavier, faster, more threatening. That gap taught me that trading skill and emotional regulation under real risk are not the same competency. You can master one without mastering the other. Most traders, myself included that year, mistake demo performance for readiness and pay for that mistake in a live account. Here's the takeaway. Test your discipline with money that matters, in amounts small enough to fail safely and learn cheaply. Lesson 9. Consistency requires boring trades, and boring feels wrong at first. Somewhere in the second half of that year, I started deliberately taking smaller, more repetitive, less exciting trades. It felt like giving up. It felt like I was trading beneath my ability. It was, without question, the best decision I made all year. The account stabilized, the emotional volatility disappeared. What felt like underperforming was actually the first version of my trading that looked anything like a sustainable business. Here's the takeaway. If your trading feels exciting every day, that's often a warning sign, not a good one. Lesson 10. The worst year only becomes valuable if you extract the lesson instead of the blame. The final lesson is the one that ties the rest together. For months, I framed that year as something that happened to me. Bad luck, bad timing, a difficult market. That framing kept me stuck because if it wasn't my fault, there was nothing for me to fix. The turning point came when I stopped asking why this happened to me and started asking what my decisions contributed to this. That single reframe is what turned a losing year into the foundation on which everything after it was built. Here's the takeaway. A bad year is either the most expensive mistake you ever made or the most valuable lesson you ever bought. The difference is entirely in how you choose to look at it. Whether you trade forex, stocks, futures, crypto, indices, or options. None of these 10 lessons is about a specific market. They're about what happens to a trader under pressure and what it takes to come out the other side with something worth keeping. The market doesn't reward the trader with the most talent. It doesn't even reward the trader with the best year. It rewards the trader who takes the worst year, extracts every lesson it has to offer, and comes back with a smaller ego and a stronger process. My worst trading year didn't end my trading career. It's the reason I still have one. If any part of this felt familiar, the overtrading, the revenge trades, the isolation, the demo to live gap, that's not a sign you're failing. That's a sign you're exactly where every serious trader has stood before you. The only question left is what you do with the lesson.